Hello, good afternoon. Welcome to the latest research launch from the CCMA. Today's research launch is brought to you by the CCMA and also Smart Numbers. Thank you very much to Smart Numbers for making today's research possible. For those of you that I haven't met yet, I'm Stephen Yett, the research director for the CCMA. I will be joined during this hour by a panel including Craig, Matthew, and Nick, who will give perspectives on today's topic, which is balancing fighting fraud with customer experience. And this, rather surprisingly to me, has been one of our best attended webinars of the year so far. I was not expecting such a good attendance. And I think the fact that we have so many people dialing in live, and I'm expecting a lot more to dial in on catch up as well, I think is a testament to the fact that this topic is no longer a niche topic. It's a topic that cuts across whichever type of role you play in the contact center, in customer care, or perhaps you're a back office specialist. Fraud is a topic that touches all of us, and we all have a role to play in achieving the right balance between customer experience and fighting fraud. And of course, as customers, we are all vigilant and increasingly aware of the risk that fraud and attempted fraud poses to us. So we have just completed a deep dive into this topic, and the idea is to explore the impact of fraud on customers and on the contact center and provide you with insight and inspiration as to how to achieve that balance between fighting fraud and achieving as good a customer experience as possible. So please make use of the chat function. If you navigate down to the bottom of the screen, tell us where you're dialing in from today. And also, if you have any questions for me or any questions for our panel, please make full use of the Q&A function. And I promise we will try to get to as many questions before the end of the hour as possible. The topic is balancing fighting fraud with customer experience. And I think this is the central question that we all face, because inevitably fighting fraud requires us to introduce a certain amount of friction into the customer experience. And we all know that customers reject friction. So it's a delicate balance that we must achieve between protecting our customers and protecting our organization, introducing necessary friction into customer journeys and customer processes in order to do that, but not unduly interrupting or annoying the customer. And it's a challenge that has always been there and always will be there. And I'm going to start off by sharing some of the research findings, which will be also published later on today. We'll be going live with the research report. That's a free download from ccma.org.uk. And then at about past, I'll be joined by Nick, Craig, and Matthew to debate this topic live with me, all of whom are featured in the report and are contributors. I had spoken with each of them in advance, as well as other members of our community to help me gather the information that I needed to write the report. So let me, first of all, just describe the information that we gathered. It's actually two pieces of data, if you like. We did a consumer survey. So we ran a survey of just over 1,000 people in the UK to capture UK consumer sentiment towards fraud. And actually, this is a follow-up to a survey that we did about 18 months ago. If you've read that report, you'll know that we did it initially at the front end of last year, some work around this topic. So this, if you like, is a follow-up in some ways, although we also introduced some new ideas and some new topics as well. We also held group discussions with contact center leader and fraud specialists, and you can see some of the logos that were represented in these group discussions. And my job for the next 20 minutes is to try to distill all of that information from both the consumer perspective as well as the industry perspective, and identify and uncover some of the key themes and topics. So let's go. I want to start off by talking about the experience of fraud, the consumer experience of fraud and attempted fraud, as well as the organizational experience of fraud. So I'm going to go right into the survey results. And the first question that I'm going to share results for you is, in the consumer survey, consumers were asked, to your knowledge, has anyone tried ever to gain unauthorized access to one or more of your accounts? And you can see here the answers are broken down by how recently this experience of unauthorized access occurred. If you add up all of the yeses ever, then 36%, or just over 1 in 3 people in the UK, say, yeah, I've had that experience. And that's slightly up from the same question or the same result that was we reported 18 months ago. So it's gone up from 33% last year to 36% this year. According to UK Finance, £1.2 billion was lost to fraud in the UK last year. So it is a very significant amount of money that fraudsters are taking away from the economy, and it is something that, as this data point shows, is a very widespread experience. And I have no doubt if we were to do this next year, that number would go up even further. The nature of fraud, however, is not exactly the same as it always has been. And what we're seeing at the moment, particularly as more and more customer demand is going towards self-serve channels, is that increasingly we are seeing a shift from historically what we might call third-party fraud, where it was predominantly fraudsters trying to access accounts and impersonate customers. What we're now seeing much more is first-party fraud, which is actually customers accessing their own accounts, but either knowingly or unknowingly, because they've been coerced or socially engineered, or have fallen victim of a scam. And this is a very different type of proposition if you are looking to detect and prevent, because no longer is it just about detecting fraudsters impersonating customers. It's also trying to flag and identify when customers themselves may be unknowingly or knowingly committing fraud. And I think it's fair to say today that the customer is the weakest link, as more and more fraud is of the first party nature. We are seeing the sophistication of coercion, of social engineering rise. And even savvy customers, even people who consider themselves quite knowledgeable, who are vigilant and are aware of different kinds of fraud, are falling victim to the sophistication of fraudsters. Fraudsters are using behavioral economics. They're working with behavioral scientists, getting very clever at being able to pull heartstrings. That's a direct quote from one of the folks that we talked to in the as part of the group discussions. And as this presentation goes on, I'll share with you more and more data points from the consumer survey, more quotes from the discussion. Historical wisdom, conventional wisdom might put it that it is perhaps more mature people who are the most vulnerable, because perhaps they don't have the same level of digital savvy, if you like, compared to younger cohorts. But what we're seeing actually today is that it is younger people who are especially vulnerable, because a lot of modern fraud, a lot of first-party fraud is perpetuated online. And of course, younger people compared with older folks tend to spend more time online. And as a result, they have more accounts. And because they're spending more of their time online, they're especially vulnerable to online scams. So I think that conventional wisdom that it's only the older folks, senior citizens who are vulnerable, no longer applies. And as we're starting to see the likes of deepfake come into the picture, and this is a quote from one of the leaders that we interviewed, with deepfakes, I wonder if it's going to be younger, more digitally enabled consumers that are more easily targeted. During the pandemic, there were a lot of younger people being caught up in crypto scams, investment scams. We've seen students targeted to become money mules. If you are a student, and your typical student perhaps is not awash with a lot of money, the get-rich-quick offer of the online scam is perhaps particularly appealing. And going back to the consumer survey, I've cut the earlier data point. So I showed you the data point that showed that 36% of people overall said that they had experienced an online or an authorized access attempt. I've cut this by the 3 age groups that you can see here. And it's pretty evident, as you can see here, that younger folks, at least responding to a survey, are much more likely to say that, yes, I have experienced a fraud attempt. Now, what's going on here? It could be that young people are more honest in surveys. It could be that younger people are more aware, actually, when a fraud attempt has actually occurred. And it could also be that younger people simply experience more fraud attempts. I think it's quite likely that all 3 of those reasons are in play here. But this is clear evidence that certainly the youngest cohort, if you like, folks in their 20s and their 30s, as you can see here, it's actually a majority, 52% of people aged 18 to 34 say that they have experience of an unauthorized access attempt. So a majority of people in this age group have been exposed to a fraud attempt. So fraud is widespread. Fraud is becoming increasingly first party in nature and targeting genuine customers. And as a result, the ways in which we must stay ahead of fraudsters has to also evolve. So let's take a look at how we stay ahead and how organizations are staying ahead of fraudsters. And it is very much all about spotting irregularities in an environment of first-party fraud. It's about spotting customers who may be displaying irregular or unusual behaviors. And that can be done both on the contact center front line by using the human advisors to spot when a customer may be doing something irregular, but it's also increasingly being done through analytics on the back end, using behavioral analytics, using transactional data to spot when those anomalies may be occurring. Quote from our discussions, it puts more of an onus on behavioral monitoring. Your focus is on identifying things that are out of the ordinary. For example, someone who's previously not been flagged but is starting to behave in a way that's not in line with their history. It is a fact that operationalizing fraud detection and prevention is hard. And it's particularly hard if you are a large organization, you have many different product lines, you've got many different departments, and particularly difficult if you're operating across different geographies. The type of fraud that happens in the UK aren't necessarily the same types of fraud that you might see in other countries and territories. You've got to make sure that your model can be adopted by the different operational teams on the ground. Another example of the complexity of operationalizing and scaling fraud detection and prevention is if you think about your dedicated fraud teams and the skills that they have versus your, if you like, your everyday contact center advisor who has to think about many, many different things as well as be aware of potential fraud risks. And the way that you train and upskill your fraud specialists may not be the same way that you train and upskill your everyday advisors. And on that point, as we're seeing the shift from third party to first party fraud, this does create a communication challenge when communicating and working with customers. And secondarily, it can also create a challenge actually for the frontline population. This is a quote from Nick, who'll be on the panel shortly and leads a dedicated fraud department. Likewise, because Nick works in a fraud department where they're effectively calling people out, challenging them, they can be more authoritative when speaking with customers. They can be firmer when challenging customers. But it's not necessarily fair on your everyday advisors to have challenging conversations because it puts them in an awkward position. If you think about what the advisor has to do, the advisor is trained to deliver the best possible customer experience. And if we're also asking the advisor to call out customers who may be behaving irregularly, that can create a certain challenge. And here's another quote which I think exemplifies this challenge. We've spent years training our frontline teams to take ownership of the customer and go the extra mile. It was all about fast resolution. As fraudsters become more sophisticated, you have to design processes differently, for example, with secondary reviews. This creates a new challenge in regard to building brand sentiment for frontline colleagues. When we build processes where more and more needs to be checked, and this can take time. And if advisors feel like their decisions need to be second guessed, that can be an internal challenge. On the one hand, we're asking advisors to deliver great customer outcomes as quickly as possible. On the other hand, we're building processes that slow down the delivery of those outcomes. So it really is all about getting the balance right and how much friction can we put into our processes, how much friction is necessary and how much friction customers tolerate. I've got a quote that I think defines the challenge quite well. It's very simple, really. The worst thing that can happen is to be known as the industry as a problematic company, which makes it difficult for you to use your account. We're all consumers, we're all customers. Perhaps I certainly have some personal experience of being in conversations with people, and people naturally in dinner table conversations will talk about experiences where there's been so much friction that it's created a huge amount of frustration, and people share those kind of experiences with other people. So here's a data point from the consumer survey that measures the extent to which friction happens. And the question here is, have you ever been locked out of an account because you forgot, for example, because you forgot your password or a memorable phrase? And 27%, or just over 1 in 4 people, say they've been locked out of an account just in the past month alone. And if you add to that the number of people who've ever been locked out to an account, that's almost 65%, excuse me. It's almost 2 out of 3 people have had that experience. So once again, friction is not an uncommon experience in the UK. We're all familiar with the concept of friction. It happens for many people on a regular basis. And last year we asked the question, how many passwords do you use for all of your accounts? And this is a, if, like the thing behind this question is this is a way of understanding and identifying how much friction customers will tolerate, despite the fact that most of us by now know that best practice means having a different password for all of your accounts. Increasingly, browser software will auto-suggest, auto-generate passwords, and will even save those passwords for you so you don't have to keep re-entering them. We know that, we have that software, and yet still in 2022, 22% of us used 3 or less passwords for all of our accounts, and 52% of us used 6 or fewer passwords for all of our accounts. And that's because simply it's too much friction to do more than that. And we asked the same question this year, and actually the results haven't really changed. It's the same. And despite the fact that more and more people are exposed to fraud, the tolerance for friction hasn't changed. When given the option, people will typically opt for less friction. And despite the fact that young people are more exposed to fraud, as I showed earlier, young people are particularly prone to using fewer passwords, as you can see on this chart, which suggests to me that on the one hand, you have the greatest level of awareness of fraud and potentially the greatest awareness of exposure to fraud with younger consumers. And yet younger consumers are also the least tolerant of friction and will go and seek out frictionless solutions that will reduce friction. So that is a challenge. That is a challenge. How do we change behaviors, given that we know that consumers do not tolerate friction by and large, at the same time as ensuring that we can protect them? Consumer duty is shining a light on all of this. And I imagine many of us on this webinar today are affected by consumer duty. You'll be in an FCA regulated business where consumer duty is very much revitalizing all of our processes. And consumer duty, make no mistake, it's a good thing. Consumer duty is leading us to rethink all of our processes and think about where friction is occurring. Consumer duty, in fact, has a phrase, the FCA coined a phrase called sludge practices, which is another phrase for unnecessary friction. And it is a good thing. However, there is perhaps a risk in the push to eliminate sludge practices that we might go too far. So beware of compromising security when we're looking to eliminate friction. The quote is, there is a danger of getting hooked on the removal of sludge practices. You remove all of the friction, thinking you're doing the right thing, focusing so much on making it too easy that you neglect the other side, which is security and protection. And of course, increasingly, there is a need to align with other stakeholders before designing processes, and consumer duty, the revitalization of processes that consumer duty is inspiring, is a great opportunity to do that. I'm sure many of us on this call will have experience of aligning with stakeholders. The sort of the typical alignment involves contact center and customer care professionals who are representing the customer experience side versus perhaps the fraud specialists and the security specialists who are representing the security side. And we've got to make sure that we can meet in the middle, and we've got to make sure that we can align, and we've got to get around the table as soon as possible to get to that middle ground. The next section I want to talk to you about is how consumers perceive different authentication methods. So perhaps you are revisiting the authentication methods that you deploy, whether it's in the voice channel or through self-serve channels as well. So we wanted to explore, and this is new for the 2023 study, we wanted to explore how consumers think about different authentication methods. Now, first of all, I've got a view to share with you around how people in the UK feel about the experience when authenticating with different types of organizations. And the question here is, how would you rate the experience from very good to very poor? So the green bars are very good and fairly good. And you can see right away that banks get the most positive ratings, and it is travel companies, airline, bus, train companies, and council and government that comparatively don't get as strong ratings. Why do banks get the strongest ratings? I think it's partly because banks by now in the UK have managed to implement some pretty seamless authentication methods. Most of us by now will be authenticating perhaps on a bank app, and most bank apps now are pretty painless and pretty friction-free. I think it's also because of the frequency with which we interact with our banks. Many of us use our banking applications or log on into our bank accounts on a daily basis. So we are familiar with what banks are doing, and perhaps we don't interact with our local council or with our airlines on such a frequent basis. So certainly I think familiarity drives positivity, and that's the theme I want to come back to in just a moment. Banks are clearly educating the market because we interact with our banks more frequently than we do with other organizations. So banks are leading the way. But what I discovered from talking to colleagues from across the industry, which was really interesting, hadn't occurred to me before, is that there is such a thing in certain industries. There's such a thing as too much education. If you're in the gadget insurance business, for example, there is such a thing as too much awareness, because typically when you push awareness, that can also increase claims. The financial institutions do a lot of preventative awareness and signposting, but with gadget insurance, there's no consequence to claiming. So when you remind people of fraud, it can also remind people they've got the insurance and to put in a claim. And guidance becomes out of date quickly, because not only are we creating awareness among our customers, but we're also creating awareness among fraudsters. One thing I learned when developing this latest piece was that fraudsters typically have a playbook of methodologies that they use, and they'll go back to methodologies that they haven't used perhaps in 3 or 4 years because people forget. So once a certain methodology seems to be no longer effective, they might go back to something that they used 3 or 4 years ago because it's been that long and people have forgotten about that method of fraud. Once the fraudster knows that we're aware of them, they'll just move on and we'll fall back. It's like tipping the moth. So there is a cloud to the silver lining of awareness building and education. This is a survey question which might take a moment to just understand what's going on in this chart. So let me try to explain to you what's going on. The question is, you've got 100 points to allocate across these 8 authentication methods. And to be specific, this is about voice authentication. So the question asked in the survey is, when you are authenticating or being authenticated over the phone, please allocate more points to those methods that you feel are convenient to you and fewer points to those methods that are less convenient for you. So the more points, essentially, the more positively rated the method. And what we can see here is that the most positive ratings are given to OTPs. So the 20.8 out of 100, if you like, the high score is given to the SMS OTP. And then the next high score is given to the email OTP. And the lowest scores, i.e. what is perceived to be less convenient, is given to voice recognition, and then followed by being asked details of a recent transaction, and then followed by phone number recognition. Now, this is interesting, and it underscores for me why you shouldn't ever determine your actual authentication methods based on what consumers just tell you at face value, because objectively, are OTPs more convenient than other methods? I would say objectively, voice recognition and phone number recognition is an awful lot more convenient and involves less friction than an OTP. However, we're all familiar with OTPs now. OTPs have been around for years. Perhaps when they first came out, we didn't like them. We thought they were clunky. We didn't like the friction that they introduced. But over the years, we've become accustomed to what OTPs are, and we just don't even think about OTPs now. We know how to deal with them. And that tells me that over time, familiarity drives positivity, as we saw with the earlier finding around why banks get the highest ratings. I think something similar is going on. I don't think objectively OTPs are more convenient than the other methods. I think over time, as you introduce a new method, consumers become used to it. And when consumers become used to a method, naturally, they'll just become more positive towards a particular method. However, as a method has become established, and OTPs are no exception, they tend to become, over time, less efficient. So OTPs are becoming less useful. The OTPs become almost redundant. It's also easy to manipulate the system to get it. So whether it's the fraudsters finding it easy to get the OTP, or actually, because of the rise of first-party fraud, OTPs can't protect against first-party fraud when it's actually the genuine customer wanting to access their account. The OTP can do nothing to prevent that. And for the same reason, biometrics are not as effective in the world of first-party fraud, because once again, it's the genuine customer wanting to access their account. The final section I want to share with you before introducing the panel is the role of AI and analytics. And as in every other field, in every other domain, artificial intelligence analytics is already and promises to have a huge transformative impact on the world of fraud detection and fraud prevention. There is a huge opportunity here. If you think about the business rules, if you think about designing business rules to identify exceptions, to identify anomalies, these typically are done very time-consuming endeavors from human analysts. The opportunities to bring artificial intelligence and automation into the development of these business rules so that these business rules can be created much more accurately and much more quickly, and ultimately they can start to be personalized for different customers. The hope is for it to be able to change rules on the fly. We will no longer have to review after a month or a quarter and make changes. AI could do that in real time. A quote from Nick Edge, who you'll see in a moment in the panel. I introduced cohort rules 18 months ago. It took a 3-month project to launch because of all of the analysis that goes behind it. Whereas I'm now doing a proof of concept with AI, which can do that in 24 hours. So the promise is to be able to accelerate our ability to introduce and update business rules, and ultimately also to personalize the business rules so that individuals, either at the cohort level or even at the individual level, can receive their own individual risk scores and their own personalized business rules. And the salient question that we're all asking in all areas is AI going to take away the role of the human? Will the technology replace the role of the fraud and security specialist? Well, the overwhelming consensus is no. AI will complement, it won't replace humans. You've all got to have the right conversation in the first place. Technology will always just augment how good your people are. You've still got to have the advisors on the front line, the human advisors, having the right conversations, asking the right questions so that the analytics can do its job. I still need a human to test that the AI has made the right decision. We use AI to write rules and protections, but the fraudsters are using AI just as quickly. We know that ChatGPT can create voices. AI is brilliant. It's going to be used against us as well. And I think as we're starting to see the likes of deep fakes come into the picture, that's going to create whole new types of requirements for us to be able to guard against. So thank you for that. I've given you a lot of information. Hopefully some of that has landed with you. If you have any questions, please do make use of the Q&A function. And at this point, I would like to invite Matthew, Nick, and Craig to the stage. Hello, good afternoon. Welcome to today's live research launch. I really appreciate your time today, as well as earlier in helping me to gather some of those thoughts. Let's just start with a few quick introductions, if we could, starting with you, Matthew.
Sure. Good afternoon, everybody, and thank you, Stephen, for a really interesting and insightful session there. My name is Matthew Addison. I'm the CRO of Smart Numbers. For those that don't know who we are one of the market leaders in contact center fraud prevention. And the other side, which we talked about today, which is the authentication side as well. So balancing that friction against that customer journey.
Welcome, Matthew. Craig, hi.
Hi, I'm Craig McKeever. I'm a fraud analyst who specializes in data and analytics with the intentions of creating card transactional and account transactional rule sets.
And tell us a little bit about Optimus, Craig.
Optimus is essentially a third-party vendor. We have multiple clients, which includes a number of credit unions and continuously now going into more mainstream or closer to the high street banking side of things with our new clients. But so we specialize in the operational fraud and prevention.
So am I right in thinking you're essentially like a white label operation for card providers?
Yeah, we do all the nitty gritty and let everybody else kind of get on with it and enjoy themselves.
Welcome to the webinar, Craig. Nick, hello.
Good afternoon, everyone. So I'm Nick Edge, Head of Fraud Technology at Likewise. We're a gadget and mobile phone insurance company.
Welcome, Nick. And I'm going to kick off with a question. I talked about some of the ways in which we're seeing fraudsters' methods evolving. I'd like to hear from all of you how you're seeing fraud, the nature of fraud evolve. And perhaps, Craig, I would kick off with you. How are you seeing in your world, in the world of cards and payments? What does fraud look like today, and how is it different from how it's been in the past?
I think my most recent experience is that we're actually having a slowdown in card fraud. I know the numbers continuously increase year on year, but when we're looking at how the percentile increase year on year, it's reducing, and I think that is due to the fact that the last decade or so has been spent rigorously creating transactional monitoring rules in order to try and prevent this, because it is the largest loss leader for us all. And it is probably the biggest issue. But first-party fraud is becoming more and more active in its efficiency of being able to fraudsters actually being able to obtain funds from customers, whether that's them giving up the card details or making purchases via gift cards online and such. But yeah, the actual usage in shops is slowing down rather than decreasing is probably the best way I can say it.
Right. So perhaps less fraud is happening in the retail environment, but more is now happening through online purchases or online activities.
Yeah, again, fraudsters are adapting. They're changing the method of how can we get the money from a customer's card or account, and we're seeing an increase in the number of, say, gift cards that can be used and then exchanged for live funds elsewhere. But the change isn't dramatic enough for us to decide to be changing the industry's methodology at this moment. It's just something that we are beginning to notice. But with things like Apple Pay and Google Pay, biometrics reduces a lot of contactless. A lot less people have physical cards.
Yeah.
So the number of transactions you'd see from a dropped card being used contactlessly in a short period of time for as much as possibly can be done in, say, a supermarket, those numbers are decreasing.
Okay. Thanks so much, Craig. Nick, in your world of insurance, how's fraud evolving?
I think we've evolved over the last 5 or 6 years, where 5-6 years ago you'd have third-party fraud with account takeover. That's now very minimal, and it's first-party fraud where the actual policyholder will be using their own account to claim when an incident hasn't actually taken place in the first place. So there's been a noticeable transition there, and I think that's reflective of your findings with security that people now have on the accounts. A lot of it is difficult to compromise by a third party in our industry, but it's easy to take advantage of an insurance product where there's no consequence to claiming. And when I say consequence, for those of you that are familiar with motor insurance, if you claim, your following year's premiums will go up, your excess payment will go up. But in the gadget and in mobile phone insurance arena, you find it's a flat fee per month, per annum, and there's no consequence to claiming.
When you talk about the sorts of ways in which genuine customers are committing fraud, is that knowingly, or can it also be unknowingly?
I think it's knowingly, but without the admission. So people will say, oh, I've not read my T's and C's, and we know that we have to signpost certain elements from a T's and C's perspective, but every product that we manage as a TPA is relating to a specific device, or it covers specific members of a family. And for example, we will say it covers you, your partner, and your children whilst in full-time education. It doesn't say your niece, your nephew, your uncle, and your auntie, but they'll then argue, oh, well, they're part of my family, but they're not your direct family. And it's the naivety, but you know what they're trying to do ultimately.
Yeah. And how has that changed? You mentioned it's changed as perhaps we've become better at protecting account takeovers, but have you seen an increase or a change in volume of first party fraud? Because that's always been possible, right?
Yes, yeah. And I think because of the biometric security, OTPs, passwords, etc., is now for someone to use someone else's account and be involved, they've actively given away the username, the password, where previously it could have been quite easily compromised. Now you know that actual policyholder is more than likely going to be involved.
Right. And again, is it always sort of active and knowing complicity in that, or can policyholders be scammed out of revealing their details?
Yeah, so I think we find, and it's a very, very small percentage of your vulnerable customers, those customers that have care support, they do get taken advantage of, but we are easily adaptable to identifying those. The volume is from friends and family, and what we'd refer to as scheme
Right.
abuse, because, for example, I've got a policy, you haven't, and I say, well, I'll claim for your phone and we'll see what happens. And
Thank you so
it's
much.
not until you have to prove it, it becomes a challenge situation.
Yes. And imagine that's where you have to be quite delicate when you're challenging people who are genuine customers. And you've got to do so in a way that doesn't antagonize them unduly, but makes them aware of the fact that something might be dodgy going on.
Yeah, it's more of a, we will challenge, but it's an educational piece as well, because ultimately, whether it be credit card fraud, insurance fraud, whatever fraud you're committing is going to be a consequence of whether that be a policy cancellation, avoidance, interaction with a different industry body where your details will be recorded, and there'll be a future impact and consequence to what you do, of whether that means you can or can't open a bank account, buy other insurance products, and they don't have a perception of I'm doing anything wrong because it's just £1,000 phone, but it's not.
Yeah. Do you rely on the claims advisors to identify potential fraud, or what mechanisms do you have likewise to flag an exception?
So we, like other industries, we have our automated fraud solution with rules varying from 6 to 20, depending on the type of claim and scheme that we're managing. But I've always said, and I'm a great believer in, the frontline agents are our best form of detection. They can clearly identify when someone can't answer a DPA question. When someone struggles to remember their own date of birth, that is an instant red flag. Whereas if you're doing an online journey, well, you can read it off a piece of paper. And I think we're still, as a society, and we look at human interaction and the psychology of crime, is people don't like lying, and it's quite difficult to lie and maintain a lie. And especially if you're asked multiple questions, that's when they trip themselves up. So again, it is those frontline agents, just they sense something, that gut feel of there's something not right with this, and let's refer it for further validation. It could be very genuine, it could not, but it's at least they're doing their job to protect the scheme and ultimately the customer.
Thank you so much for that, Nick. Matthew, you work with a lot of organizations, and what are you seeing in terms of how fraud is evolving?
No, first and foremost, I think I'd echo the comments by the other panelists, but that's the easy answer. And what do we see? We see, and I think this is where a mindset change has to take place. We see that fraud is becoming so sophisticated; it's quite unbelievable. And I think if you ask most of the population, what does a fraud look like? They have a picture of somebody sitting in their garage, trying to do one little transaction to make a little bit of money or whatever it is. But actually, if you speak to the police and those organisations, they are so organised in the criminal world. Actually, I'm just thinking of a typical fraud cycle now. You get the data breach, and data breaches have gone up astronomically across the last number of years. I think last year was something like 1,888 data breaches. When those data breaches are now happening, there are parties of criminals working together to validate that data. And because of the advancements in digital fraud prevention, they're attacking the soft underbelly. And one of the biggest places, I guess, is the contact center. And they're social engineering the IVR and the agents to really understand and claim all that, gather all the data. And then they're passing that immediately off to other parts of the criminal world to actually then either watch the accounts, do the account takeovers, but have somebody else undertake the transaction. So it really, as fast as we keep up with it, they're working as fast to get over things as well. So it really has developed in a great way, and their collaboration is quite mind-blowing, if I'm honest.
So my next question is, given how things are evolving and the speed at which things are evolving, how are our methods of detection and prevention evolving to suit? What are some of the key ways in which we are trying to stay ahead of the fraudsters? And perhaps we'll stay with you, Matthew. What are some of the ways in which you're evolving, or you see your partners and clients evolving their detection and prevention methods?
Yeah, I think the first thing I'd say is that there's been a lot of work done in sort of, let's say, a number of the channels, and it's now protecting those what have historically been those sort of less obvious channels. And how do you do that? And a lot of people have processes that sit to the right-hand side, where once the fraud potentially is identified, it's really easy to stop it and track and do something about it. But actually what we're seeing now is, how do organizations shift to the left, and how do they almost preempt, and how do they understand where to look? Because if you get hit by 5 fraudsters on Monday and then another 5 fraudsters on Tuesday, that number increases. And most organizations don't have huge fraud departments, and there's only such a limited amount of ability to look into and track what they need to track. So it's about using, I guess, from our side, technology to understand and build risk scores of who actually may be making a contact, and is this person or organization who is making that contact, are they legitimate, number one, in which case you can have faster authentication, which is also what we're talking about here, customer journey. Or if they tick a number of flags, then are they actually not who they say they are? And therefore, should we bring attention to this activity and therefore investigate these? Because if you look at all the risk factors and use AI to analyze it, actually those people might be where you need to start looking. And that's what we're seeing and what a lot of our organizations are doing. They obviously feed that then into their risk engine, but it's about that pre-understanding even before they've reached the contact center.
Thanks so much, Matthew. Craig, if I may turn to you as somebody who designs risk engines and develops risk engines day in and day out, what are some of the ways in which the way that you're developing those business rules and those engines have changed, if at all, in recent times?
So currently, it originally was two separate sides of this, of the card rules and the account rules, and now we're building systems in order to try and incorporate all. Simply because we're seeing it's like almost like a crossover of certain accounts. So if an account is opened, when an account is open fraudulently, or with the intentions of using fraud, it's almost, we've got rules to help prevent our customers becoming victims, as well as rules to try and catch perpetrators. And so if an account is open with the intentions of committing fraud, we need to be able to have rules that will trigger events of unexpected or unexpected activity of transfers into the account, whether it's a high velocity or high volume or certain times of day references. But then that would be followed by cash withdrawals, attempts of immediate spends. It's not necessarily a transfer in and a transfer out anymore, where it's just kind of trying to funnel the money across. It's gaining access to funds with immediate. So our rule sets now, and our basis is an all-encompassing, but again, it's trying to tread the fine line of how annoying are we going to be to our actual customers, because they're going to have to be involved in these rules. And unfortunately, we're going to have to get a decent number of false positives in order to be able to tighten and actually get these rules to work correctly. And so the actual systems, I wouldn't say necessarily changing. It's that they're evolving into one in the same rather than multiple.
Right. I want to stay with you, Craig, on this note of false positives and bring a question from the audience. There's a really good question, and I'll read it out for you, Craig. What is the best practice in managing engagements when you initially have a suspicion of impersonation? So when there is an account takeover, we train our associates to give a systems down measured before referring a call for review when they feel they're not just speaking to a genuine customer. Is there a better way to handle this, particularly for repeat offenders? So we don't want to trigger too many false positives, but how do we get that balance right?
So if it's in regards to the actual contact from somebody trying to impersonate one of our customer, I would advise as analysts, well, my advice as an analyst would be, I'd prefer you to take as much information without creating any kind of concern from your side to the fraudster. Because the more information you can gather for me, the more information I can use in the future, obviously. But that's the selfish side of my role, trying to what I can get from it. Realistically, at this point in time, it's part of what you discussed in the presentation of the one-time password in our conversation last time we spoke of it. They're kind of almost becoming redundant. And I've seen another question in the Q&A earlier on about how do we sit on a similar thing of whether we can stop the what can we use to around the one-time password? How can it be replaced? Because yeah, they're using our call centers to gain the information or the questions. Then they're saying the questions to the customers and getting the customer to provide the one-time password. It is the requirement to move across to the mobile apps. There is a definite need for that now to prevent majority of fraud. I know your evidence shows that one-time password is the most convenient, but that's because the industry is designed for that now. You receive your one-time password by text, and it autofills from the text message into whatever website or app it needs to be in. We do need to change across. We're seeing our analytics shows that it's not protecting people the same way it used to. But that's why AI won't replace anybody. It's why there's more requirement to have human bodies involved in the process now, because AI is not going to notice background noise, the concern of someone's vocal tones, and where Nick manages, and Matthew, with your experience, you'll both know that it's the analysts, the people on the phones that really identify these frauds, rather than it is me as an analyst and my rules and what I've seen. I require the information people iPad to me. I can then provide guidance and create trigger events for analysts or investigators to work, but I can't identify it. I can't find it.
Thank you, Craig. Matthew, I'd love to get your perspective on that question, which Craig has addressed. The question was from Pete. The scenario is Webster is targeting an account or attempting account takeover on web chat, but at the same time, they're outbound calling the actual customer, claiming to represent the organization and getting the OTP from the actual customer, which they then bring into the web chat for the account takeover attempt, a multi-channel approach that adopted by fraudsters. Do you have any thoughts on managing and dealing with that?
I think that it's going back to what we were talking about as well. I agree. There's many tools to use and many processes, and we have clients that use our application with AI to understand where should they look potentially, and then they move those calls to either a fraud team or people who are specialists in trying to understand and work with this. Because I think one of the challenges you have when you leave it with just let's say the front end agent, is that those front-end agents are trained in so many different skill sets. Is fraud and understanding that side one of their strong points? Probably not. But actually, if you put it to the relevant people, then they can help gather that information and maybe take it a little bit further. So I think that's that side. In terms of the question itself, one of the things we do is when people call in, we identify through the data we're privileged to see, because there's an Ofcom regulated provider, can we actually match, is that person who they say they are? We look at about 250 attributes, and actually we then flag that up to the said organizations and say, actually, you may think you're talking to Matthew Addison, but actually we don't think this is Matthew Addison calling. And therefore we flash up on the screen that's a red flag, but then the agent can take activity on the back of that to maybe either carry out more KVAs to put the right sort of process in place, or divert it to somebody who can actually deal with that.
It feels like that must be one of the ways to accelerate our ability to protect, is not rely on a single authentication method like an OTP, which we all know can be easily obtained. It's to triangulate or triage multiple data points, and I guess the trick is to be able to do that quickly without impacting the customer experience.
Yeah, and that's where I think you asked a question earlier about AI, and I agree. Hopefully we're never all going to be overtaken by AI. But if you go back to the fundamentals of what AI brings an ability to analyze and process huge amounts of data very quickly, and it's looking at those attributes and the ability for the system to learn to say, actually, based on the percentage chance, we believe this is not who they say they are. This is likely to be a fraudulent activity. It may not be the fraud itself, but it might be that you're testing the IVR to try and prove my date of birth. And actually, you can then flag these, and it draws people's attention or the organizer's attention to where should they look. Because if you were to take it to the fraud prevention extreme, you'd lock everything down. But then obviously that would have a massive impact on whether people would do business with you. So it's about drawing people's attention to the right space from our perspective.
So much. Thanks, Matthew. Question for Nick. How do you balance the frontline agent who's using their gut feel, if someone is being awkward or if it's a fraudster, versus a genuine customer who might be vulnerable? So using the example of difficulty answering KBAs, how can you balance when you think it's suspicious versus it's a vulnerable customer who genuinely is having trouble answering the KBAs?
I think where we're all aligned with vulnerable customer training and how to handle vulnerable customers, it's then we have a responsibility to protect that customer and also explain how we're going to protect them and why we're asking certain questions. And by doing that, you differentiate very quickly between, are you talking to a fraudster or the vulnerable customer themselves? And we'll get scenarios where don't talk to me on the phone, email only, or I'll be representing someone else who may not be able to answer the questions in full and earnest quality. And I think we can take them out of the frontline operation, we do the warm transfer, but then it's the explanation and education that goes with it. And the messaging is, we're not treating you as a fraudster. We're doing this ultimately to protect you. But in order to do that, we're going to ask for certain documents or cooperation from yourself. Because very quickly, if someone feels they're supported, they'll be complicit and join in with the process. If they're not, that raises the question of, are these the genuine person or is this part of the vulnerability? Because you ultimately want a service, so why wouldn't you cooperate if it was for your benefit? And it's always got to be that education and explanation that goes with our process. And it's saying with vulnerability, yes, from a contact center through to the fraud team, there's an AHT challenge, FTE, SLAs, we all work in that world. It's saying these exceptions will fall out and they'll take as long as they take, because at the end of the day, there's a person that needs protecting, whether that be a genuine person who's unaware of what's going on, or we're protecting them without their knowledge and removing the fraudster.
Is it possible to hone those processes and the messages to the point where the customer will just accept them? Or is it inevitable that you will just annoy a certain amount of customers? Is that, who would then complain?
Yeah, I think they will complain because it's, why are you asking me? What's the benefit? And again, it comes back to the education of, we're doing it to protect you. You normally find the complaint is not by the customer. It'll be someone representing them, or it's actually, in our case, we see it's the fraudster, because they then realize they've been caught. But what we do is, our investigative methods that we use is, if we are non-challenging and confrontational but supportive, we are acquiring more and more evidence as the conversation takes place. And then when we have sufficient evidence, we can say, yes, this is a genuine customer and they are vulnerable, or we've caught the fraudster and this is why we're now going to take this action. It's by, I suppose, we're not tipping them off too soon, because again, by the nature of being vulnerable, and Craig mentioned it earlier, is there may be a different pitch and pace of your voice because you are nervous, and we understand that. So it's reading between the lines of what is genuinely nervous, but then ask an alternative question that they should know the answer to.
Thanks, Nick. I want to stay with you for another question. We've got a really good question, which comes from one of the complaint managers on the webinar today. So as a complaint manager, what advice would you give to my team who are detached from the fraud department, who receive increasing number of complaints from customers who claim to be genuine and are being treated unfairly? How can complaints teams work hand in hand with fraud, technology and decisions to ensure that there are spotting genuine examples and reduce the false positives and complaints?
A very good question, and a question I got asked a year ago is, have your agents work together, come and learn each other's processes. And if you can afford the time within your particular business to do that, it will be invaluable. So for us, where we will ask certain types of questions and in a certain way, or we'll ask for certain documents, when that transposes through to a complaint handler, they don't understand the why and what is it going to achieve. So educate them in why you've done it. Once they understand our journey, it all makes sense to them, because it's all about building up an evidential picture of, is it genuine or not? And that is a complaint in our world of, why did you ask me this question? Why have you asked for that? And again, it's empowering people with the knowledge so they understand the process.
Thanks so much. Got a question here, which I'll open up to the whole panel, if anybody has some specific experience of this. With the rise in new online banks and non-PRA regulated banks, I appreciate none of the panel works in a bank, but I think the question might extrapolate to other industries as well. How do we prevent accounts from being opened by fraudsters using the client's personal details when you've managed to gather personal details, personally identifiable information enough to open an account? Is that something that we've ever come across? And do we have any advice as to how to prevent it, Craig?
Yeah, so the expensive but most efficient way of preventing that is becoming a CIFAS member. Being able to share that information across the industry and being able to identify who has been impersonated previously, and being able to load and upload those details to prevent it from happening again, it can't be overvalued. It's extremely useful across both fraud teams as well as analytical teams and customer contact centers, being able to identify these things. The other side of it is there's always a mistake. As clever as fraudsters are, there's always a mistake. There's always some kind of slip up with regards to contact details that don't apply. Whether it's as simple as an email address just isn't the same name as the customer. It can be as simple as that when we come into our application stage. With most of banking being done through online or through mobile apps now, I don't think there's any reason for us for any companies, even unregulated, to not request for proof of ID and proof of address and some kind of live photo or something to help prevent that just from the beginning without having to invest in membership in CIFAS. It's all digital, it's so quick and easy for us to be able to work it that there's no reason for us not to do it, would be my answer.
Thank you so much for that. I can see there's one or two questions that have just come in, but unfortunately, we are almost on the hour, and I'm going to have to wrap it up. I want to say thank you so much to our panel. It's Craig McKeever from Optimus Cards, Nick Edge from Likewise, and Matthew Anderson from Smart Numbers. I want to most of all thank all of you for dialing in, whether you're dialing in live or whether you're dialing in on catch up. I hope you've got something out of today's session. Please look out for the report, which will be a free download shortly later today, live on ccma.org.uk. Thank you so much to Smart Numbers for making this webinar and this research possible. Thanks again for your time today, and see you on the next one. Thanks again, everybody. Take care.